The next type of market cycle is the bear market cycle, and it also has three very recognizable phases. The first one is that period of distribution. This is the opposite of accumulation. Before a bull market, the institutions are going to go through a period of accumulating that stock or accumulating a series of stocks representing an index. When it comes to market tops and the beginning of a bear market, you're seeing the opposite. You're seeing that distribution. At this point, the news is all good. The market environment has been trained to just buy the dip blindly because it's been working so successfully. Whether you've been buying the dip blindly or not, you're trained that now you have to do that, now that it's too late and the institutions are selling to you. These rallies that normally were going out at the highs of the day are not doing that anymore, and they're fading in the afternoon. Rallies in the beginning of the week are fading in the second half of the week, going out near lows on Thursdays and Fridays. These are signs of distribution, but the news is still good. That's when you start to get that sell-off. In a lot of these times, it can be a panic sell-off. The reasons for the selling is unknown. There are certainly theories about things that might be in the horizon, but nobody really knows because that information isn't out yet. You won't know until after the fact. So you're getting a lot of headlines justifying these sell-offs as profit taking or things like, selling into pre-earnings, selling before announcements. These are just justifications that are clearly not true. And that's when you're getting the panic because of that unknown. You start getting specials on the major media outlets about, on Sunday nights, about market meltdowns and panics. And obviously these things come way too late. Where were these things during the distribution phase? Now that the market is in a state of panic, now you're essentially reiterating that panic. You're really pressing your audience, really scaring them, and that's when you get that last leg down, that puke, that I just can't take the pain anymore, and they're just throwing in the towel. The market is still making new lows. All of the bad news is out. Now the market and the environment, us as market participants, are fully aware of why the market's been selling off, whether it's an economic factor domestically or internationally, or something wrong with the accounting. But when the market was selling off, we didn't have that information yet. So now that it's fully known, now the panic sets in, the throwing of the towels, and on these new lows, momentum starts to pick up. We start seeing bullish developments out of momentum, bullish developments out of specific patterns that traditionally would be bearish, and we're going to get into those now, but I just want to reiterate that what theoretically should be bearish at this point resolves higher and starts turning bullish. And again, the market, the media doesn't know why the selling has stopped, but the institutions underneath the surface are already accumulating shares, and that's how bottoms are made. It's not an event, it happens over time. So while the frustrated are puking out at the lows, the smartest money in the business is buying it from them.